I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have back with us Kyn, the CEO of Minterest. Kyn, welcome to the show, and it is great to see you again.
Oh, thank you, Ashton. It's always a pleasure to come back and speak with you. We always have fun conversations. So, yeah, thanks a lot.
You're very welcome. Likewise, I'm excited to hear the latest updates on Minterest DeFi growth. We've had you guys on times, and each time the market is hotter in crypto, and there's a little bit of a needed cool down right now because Bitcoin has been, double since we spoke 2 times ago, and the DeFi TVL in all blockchain ecosystems is also growing exponentially, and I know that is also trickling into Minterest. So I'm excited to dive into the latest with you, but I'd love to start off from a high level for those who haven't seen our previous videos, or they may want to know more about Minterest. You can start by just giving a high level on what exactly is the Minterest DeFi platform, and then we can dive into all the latest details.
Yeah, absolutely. Yeah, certainly. The market's crazy, man. But anyway, let's talk about Minterest. So Minterest is the next generation DeFi lending protocol. So the way I generally describe it, as I had before, it's sort of like having banking on the blockchain. So, about 90%, 85-90% of users who hold crypto assets, they hold it in their wallets. And as I've said before, it's sort of like the proverbial holding it under your digital mattress, so to speak, like having cash under your mattress. What Minterest allows you to do is deposit those assets into a decentralized bank of sorts, and you can earn interest, right? As you would in the real world where you're depositing into your bank account. That's the high level gist of how to think about Minterest. And so pooling assets together from around the world, it allows for anyone to participate. Now, the way Minterest works is that you have people who will supply, who will deposit, and then you have people who will actually borrow those assets for various reasons. In some cases, you'll have Bitcoin miners who earn Bitcoin, but they don't want to sell it just yet. So instead, they'll say, I'm going to deposit my Bitcoin, and I'm going to borrow some USDT so I can go buy some more mining equipment, which I guess is going to be very popular right now before the halving, especially. That's one use case. And then you have traders as well who do the same thing. So there's a robust ecosystem of people that are utilizing lending. Now with Minterest, we go one step further from everyone else, basically. So most lending protocols, they capture, every lending protocol really, they're fee generating machines that capture a lot of fees, but those fees that are generated tend to be extracted away. They go to third parties, they go to protocol owners, not back to the users of the protocol. So for us, we thought, how do we make DeFi fairer? And for us, it's about taking all those fees, which tend to leave that system, and bring it right back to the user. So we redistribute all fees captured back to the users of the protocol. And by doing so, your deposit rates are effectively higher than the market rate, and your cost of borrowing is lower than the market rate. That's the gist of how we've designed Minterest. And at this point, Minterest V1, as we call it, is now fully featured and fully deployed on the Mantle network. It just happened this week. We have not announced that, so I guess you're the first one to hear it. But it's really exciting to have the entire feature set of V1 ready to go.
Very exciting, and thank you for that explanation, Kyn. And there were some great examples in there of it's a decentralized bank, and it's like holding cash under your mattress, except for, as Michael Saylor says, anybody who's holding cash, not only you're losing value because of inflation, and hopefully if you're holding it in Ether, for example, even if you're just holding long-term, just a stack of Ether, hopefully that's going to appreciate, but also if you're using DeFi, if you just have a stack and it's just sitting there, being able to supply that or lend it out to somebody else in a safe way, maybe you're not even borrowing, you're just putting it in there to earn a bit of interest, then you're going to be getting more on top of just the appreciation. Can you talk about in a DeFi platform, what ideally should somebody look for? Say I have a stack of Ether. Do I look for just the highest return or low cost or the engine that underlies the DeFi mechanism? What makes a DeFi platform special?
Sure. Great question. So as with anything that you're utilizing that requires smart contracts, you want to make sure you're protecting your own assets. So it's important to look at, when you look at any project, whether it's a lending protocol like Minterest or if you're looking to utilize a DEX like Uniswap or whatever it might be, always look to see about the underlying smart contracts. Have they been audited? If they've been audited, by whom? How often are they doing it? Are doing these audits? Because that gives you a sense for the legitimacy of the underlying code. At least that's the first piece of it. The second part, I generally like to see if the team itself, right, the members of that team, if they're docs, as in like, can you actually find out who the people are that are developing it, right? Because though in our space, we're accustomed to having a lot of anonymous teams operating businesses, operating projects, and that's perfectly fine. It's just a decentralized space and we can do it as we wish. But for me, I tend to really only use projects where I'm like, I kind of know there's a history with the founders, right? Or the history with the team. There's a team there. It just provides a little more sense of safety for me personally, right? The third thing is obviously then from there, because you may be attracted to something because it's going to provide you with good returns. That's super. But at the end of the day, these two first pieces, I look to. And then from there, certainly like looking at the kind of returns you can get and how you can utilize the protocol. Is it easy to do it? Making sure that for Minterest, everything's very liquid. So you can deposit, you can withdraw at any time. No liquidity is locked in. For Minterest, there's no impermanent loss. You don't have to worry about like whether or not your assets are going to lose value if the market moves one way or the other, like you would on a Uniswap or an AMM, a DEX, right? So I look for things like that because for me, I don't have time to keep managing my positions. So I would rather just go somewhere where I can say, okay, I'll get a general return. Maybe I won't get like 1,000x on things, but at the end of the day, I'm also not going to go to zero necessarily. I'm happy with that. I can focus on other things in my life. So that's the way I do it, right? Everyone else has their own approach to doing things, but hopefully I give you just a little sense for kind of what I look at.
Yeah, no, I'm glad you mentioned that because I feel like a lot of people are hesitant or don't want to take the time to understand DeFi, even though they have a lot of Ether or other coins that they could be earning interest on because they've heard of, there's extra risks to understand like impermanent loss. I understand with Minterest, normally impermanent loss comes when you have two coins in a pool and then the price is moving different ways. But in simple platforms like on Minterest, on the Mantle network, if you just deposit the Ether, then there's only one asset and then there's no, if it goes up, it goes up. It would have gone up anyway if you hadn't deposited it. If it goes down, it goes down. Is that correct?
That is correct. There is absolutely no impermanent loss on Minterest. It's a single asset that you deposit. So not two of them. And if you deposit one ETH, then, when you decide to withdraw, you should always be getting more than one ETH because interest is accrued every block, every several seconds, right? Obviously, there's a gas fee you may need to pay to make the deposit and make the withdrawal. So you have to always take that into account. Usually it's quite minimal, but still, you're right. That's basically it, right? And it's very simple on Minterest. And that's one of the things that when we deployed on the Mantle network back in January, we ran this campaign. And what the way the campaign ran was simply we just said, hey, you'll get some rewards. Just come to Minterest, deposit any asset, any amount that you want, $1, whatever you want. And you can withdraw at any time. You don't have to keep it there. That's it. And I think what we discussed last time, people came there, they did that, but then they just didn't withdraw because they realized why should they? They're earning interest. So simple for them.
That's very cool. And I love that there's no limit there in the sense that if you had 10,000 and you deposited it, you're going to be getting the same APY percentage per year as somebody who's putting in $1. And, a lot of places you go to some fund manager and you say, hey, I have $20. Can I earn interest? They'd be laughing at you because, they won't accept somebody of your level. But with DeFi, you have that ability to, hey, I just have, $1,000 that I've saved up over a year in Ether. Let's get some extra APY on it. And there's different mechanisms on different DeFi platforms. With Minterest earning, from what I understand, there's, you're earning in the token that you're depositing, but also because of the Mantle bonus, and then there's the Minterest token. There's like multiple ways that you're earning. Can you talk about exactly how that works when you deposit Ether, for example, on Mantle Network?
Absolutely. I'd love to tell you about that. So on Minterest, you can earn up to 5 different yields. It's kind of crazy. So I'll break it down simply, basically. So, all right, the first thing is it's the base interest rate that you earn. So like when you go to a normal bank, you deposit your dollars, you're earning some percentage, whatever it's 0.1 or whatever the heck it is that we're earning today, 5%, right? You're earning that. That's the base interest rate. Same thing on Minterest. You get that. That's the first thing. The second is that you will also be earning emission rewards in the Minterest token, MINTY. So you'll be getting that as a second one. There's a third one for most of the markets as well, for most of the token markets that we offer. That's the MNT token. So that's Mantle's token itself, Mantle Network's token. So there are 2 emission rewards that you earn. One is MINTY, one is Mantle. That's three forms of interest. The fourth one is there are certain tokens that are interest bearing by themselves. So on Mantle Network, they have something called METH. It's Mantle ETH, which is basically like staked ETH, like Lido's staked ETH. And just by holding that token, you already earn an interest within on an ETH, basically, right? So that's the fourth one. And then the fifth one, which we just launched this past week, or this week, I should say, is something we call an NFT boost. So I'll explain that in a second. But basically what this means is you will be earning an additional yield on the MINTY tokens and the MNT tokens, those emission tokens. You earn a boost in those rewards. And the way that works is Minterest has launched a series of 3,000 NFT collection. And these NFTs, they're not just pretty to look at. They celebrate the top 100 most influential in blockchain circa 2021. So you have some really infamous people there with interesting bio descriptions from 2021. And you can probably think of a few people off the top of your head who might be on that list. And we are not altering any of that stuff. So it's a piece of history, basically. Anyway, so these NFTs, they are structured into 12 tiers of rarity. And what they do, they have actual functionality within the Minterest protocol. They provide anywhere between 20 and 50% boost in your emission reward. So for example, if you have our rarest one, which is Satoshi provides a 50% boost. So let's say today you're supplying on Minterest and you're earning 10 MINTY tokens and you're earning 10 MNT tokens, the Mantle token. Well, if you hold Satoshi, you won't earn 10 of each, you'll earn 15 of each, 50% increase in both. 15 MINTY, 15 MNT, simple math. The purpose behind the NFTs is, number one, it rewards our users, basically, our liquidity providers, gives them an increased yield. Secondly, it's a great overlap with an audience who love NFTs, but maybe have never used DeFi. So it's a wonderful way to kind of educate new people about the fact that there is something called DeFi, and they can do more with it. Back in 2022, I went to NFT NYC, and there was a whole NFT conference, and met all these cool people who came into blockchain because of NFTs. They found their NFT community. They love their NFTs, and that's how they got introduced to Ethereum and ETH, right? It's a whole new crew of people. It was pretty amazing. But they didn't know what DeFi was, and that's totally cool. It was great to hang out with them. But that's kind of the idea. There's this intersection here, and that's what these NFTs also represent. Great way of be able to share the word about like what Minterest is and bring in new people into DeFi, and also reward those people who are already DeFi nuts and just want to basically double down and get better returns.
Mm-hmm. No, that's actually
so that's
really
great.
great.
5 yields.
That's crazy. And I didn't know that about the METH, that there is like an integrated yield. That's really cool. I do experiment a little bit with METH on the Mantle blockchain. I want to ask a little bit more about the Mantle blockchain because I feel like another thing that is sort of stopping people that have a lot of Ether or coins sitting in hardware wallets from going to DeFi is not only the risks, but the options. Now that there's so many blockchains to choose from, in the past cycle, Ethereum was sort of the main place where the value was locked in. But still, if you only had $1,000, maybe to do some it will cost you a few $100s, and it's just not worth it for people that aren't super wealthy and can afford to spend hundreds of blockchain to make transactions. But there are so many different blockchains. I'm guessing you have a strategy behind why is a Mantle blockchain good for DeFi, for Minterest, and what does that really look like for somebody that has never used Mantle before, and how easy is it to get started getting the METH and depositing into the platform?
Yeah, great question. So Mantle, it's a layer 2, and so it's built on top of Ethereum. So it's actually pretty simple to move on to Mantle Network. They have their own native bridge. So if you have some ETH on Ethereum, you can easily use their bridge to bridge Ethereum over to Mantle Network or any other supported asset like USDC, USDT, whatever you want. And what Mantle does is that if it's for the first time that you're using their bridge, you will receive, they have their own gas token. That's the Mantle token, MINTY. And so, when you bridge your assets over to Mantle, they give you a little bit of an airdrop of MINTY tokens. So that means that you have the ability to operate on the Mantle network because they've given you the gas token essentially. So I think the onboarding experience is very easy on that front. From there, it operates just like Ethereum does. So if you have a MetaMask, you can easily use that. They have, similar structure ecosystems in terms to lending and borrowing and AMMs, DEXs, and NFT marketplaces is the same typical structure. It's just much cheaper to do all the operations that you want. And just to give you an idea of the kind of impact that a much cheaper blockchain can provide our users in terms of the value, on Ethereum, we had roughly about when we first launched on Ethereum, about 200 users at the very start. We had a private launch, and all of them pretty much had a balance that was over $1,500, minimum. On Mantle Network, right, we have over 9,000 suppliers on Mantle Network right now. And when you look at some of the token markets, you have, about 5,000 people who are depositing assets in one market. And the range goes from the lowest is $3 and a large part between $3 and $50, basically, a big chunk of them. And then from there, you'll have your whales and things like that, your dolphins and your whales. You have a large chunk, you have like 3,000 people who are depositing between like $3 and $50. They can do that, right? As we were discussing, right? There's no minimal amount. As long as you're okay paying, a few cents in gas fees, it's very affordable for anybody. And that's the whole point in terms of what we're trying to build at Minterest. So yeah, Mantle Network, much more inexpensive, easy to use. The team itself is very strategic. They're very aggressive as well in the right way. They want to build, they want to have a great experience for their users as well as for their ecosystem partners. They're very serious about that. So it's one of the reasons why we chose to deploy there. Plus, I think, as I mentioned maybe earlier, they have a $2 billion treasury. And so they are well equipped to, continue building for the long term.
It shows that, hey, there's nothing to be afraid of if you just want to start experimenting with this for the first time. So that's really cool. And I was looking at the platform. I can't see the exact users in the numbers, but I can see the overall value locked in the platform, and it's around 10 million now. And it seems like it's been growing in the last month, even with the Bitcoin going down a little bit, which is a healthy correction. The platform has been continuously growing since the Mantle launch a few months ago. How do you guys create an ecosystem that has sustainable growth? We don't want to have like the video game where it comes out and people get excited, but then they get bored after like a month or so. Obviously, it's different with DeFi. When you have yields that you're continuing to earn, you just deposit and forget about it for 6 months, a year. But what's sort of the strategy in continuing to grow the value locked
question. So yeah, so for just from a statistics perspective, as of today, we deployed 2 months ago on Mantle Network, and we're already the fourth largest protocol on Mantle Network by number of users. It's only the OGs that have been, on Mantle that are larger. So it definitely highlights the fact that, for us, it's about how do we target the widest, berth of users on Mantle. How do we onboard them in an easy way? And so for us, the way we've done it is we launched Minterest in stages. We deployed individual features along the way initially, which is supplying. You could just deposit. There was nothing else you needed to do. Kept it simple, basically. We ran a campaign with Mantle Network to highlight that piece of it. And so that was really a great way of onboarding in the initial set of users. Then we deployed the feature for borrowing. And so that was its own thing. People started learning how to borrow, and we kept it so that you could only borrow a small amount, because on a lending protocol, you can get liquidated if you borrow too much and you don't understand how the borrowing works compared to your deposits. We kept all of our users safe. We just said you can borrow up to a certain percentage. It's highly unlikely you'll get liquidated unless the market really drops like 80%, 90%. So, the idea was educating them about that. Then they started, hey, I'm actually earning right now on Minterest. You can actually earn by borrowing. You're paying a small interest rate, but you're earning emission tokens. So it's actually profitable to borrow at this point, right? So that was the second part of it. The third is with the launch of these NFTs that we've just done. Right now on Mantle, their NFT marketplace is called Mantle. So a lot of alliterations there. But anyway, so the NFT marketplace, Minterest, we're the second most active NFT product on Mantle at this point, because people are now realizing they want to get those NFT boosts, which we just launched this week. And lastly, something that we have not announced yet, but we'll be announcing next week, is that now users can do full-on borrowing, meaning they're not limited as they were before. And what that allows them to do for the degens out there, they like to kind of double, triple, quadruple up on their earnings. So they'll supply, earn yield on that, then they'll take whatever they supplied, and then they'll borrow from that. And right now, again, it's profitable to borrow on Minterest. And then whatever they borrow, they'll then loop it back around, supply it, and borrow and supply. They just do this looping thing. It's not for the faint of heart, because it can get users liquidated at some point. You're basically, it's leverage. It's leveraging, right? As you would on your trading. But some people love to do it. And so essentially, because we've been launching all these new features, and we also ran another campaign with Mantle Network when we were launching the NFTs, right? It's helped to bring in more and more users. Beyond that, we have some really good individuals in the space, people who are well-known, KOLs, influencers, whatever it might be you want to call them, who also have been supporting us in terms of bringing more awareness to the work that we're doing on Minterest. I think all of these things combined, it's helped us to kind of grow steadily that TVL, and hopefully it will continue moving forward.
That's incredible, and that's exciting to hear. The borrowing is opening up. That's an interesting strategy. I think one way to potentially lower the risk is, from what I understand, you can supply USD stablecoin, and you can also borrow stablecoin. So as long as one company, Circle or Tether, doesn't explode, you hopefully won't get liquidated on stablecoins. But I know that I know personally a lot of people that whether they're on a centralized exchange or somewhere and they have Ether, it's like, hey, I could borrow more because I think that Ether is going to double and Bitcoin's going to continue. If we look at of GAF launch and everything, this is a bull market. I instead of trying to go to work 80 hours a week instead of 40, I can just borrow a little bit of capital and use that to trade. It's not a bad strategy, especially if you're early on borrowing, and so there's more capital to borrow. So hopefully the rate would be better. And also, if you're doing it on Minterest, then you're earning other tokens, which could also appreciate in the future. So there's a lot of variables.
You're absolutely correct. And, each of these points you brought up are different strategies that there are different reasons why people do utilize lending protocols. And that's kind of you really highlighted the flexibility, right? Of like why people use them and what their game might be, how they want to do it. Just deposit your asset and just let it go, just chill basically. Or yeah, maybe you leverage up on some safer assets potentially, like stable coins. But and that's the lovely thing is you can do that. You also have people who they'll use it to even short positions. So like if you think the market's going to go down, then what they'll do strategies like they'll say, okay, I'm going to supply $100 of USDT. I'm going to then borrow $50 of Bitcoin. I think Bitcoin's going to drop in value. They take their $50 of Bitcoin, they go to a market, they sell it for USDT. Then they wait for the price of Bitcoin to drop. Then they buy the balance of Bitcoin that they borrowed, pay back the loan, and they pocket the difference. I mean, so like you have all kinds of strategies that people use, and it's actually quite enticing to see kind of how they do this. One person we met actually a major liquidity provider group. They actually that's what they do. They're degen liquidity providers, and it was interesting to hear their strategies where they participate both on perp dexes where they have funding rates and they'll have short positions there where they can actually earn also an interest, and then they'll counter that by supplying another asset on Minterest to earn an interest rate there. So they actually hedge potential downfalls and they make a significant profit on that. So again, everyone has their own strategies, and it's fantastic to learn about it.
Yeah, no, it's really interesting, especially with who knows what's going to happen next in the market. I'm hoping, we continue upwards. It seems like that's been the trajectory of 2024. And DeFi as an industry there's a lot of room for growth. I think how I see it is, the Bitcoin ETF really pushed a lot of more institutional investors and people that are familiar with TradFi or borrowing and lending in traditional markets. They get Bitcoin and then they look to, when they filled their bags, they look towards Ethereum. And then when they filled their bags, they're like, hey, how can we actually utilize the financial products in Web3 to either borrow or earn yield? And that's where the explosion in DeFi really happens. And I feel like that's going to happen in the next, few months to a year. It's going to be a wild ride. So I'm excited to see how that Minterest follows along with that path. And I'm curious if you have any insights into where you sort of see DeFi going. Do you agree that there might be this trickle-down effect, or how might DeFi be affected by all the capital that's coming into crypto?
So when it comes to DeFi, the way that we've thought about it from the beginning is that there are multiple categories of projects, different types of projects that will be coming and going. But one thing that is here to stay is DeFi as a category, because blockchain, the entire structure of it, the source was Bitcoin, and the whole point was having financial freedom, making the Bitcoin and something decentralized money or store of value, however you think about it. And DeFi is just the next step of, again, decentralized banking. It's not going to go anywhere, basically. It is a core part of what allows people to trade, allows people to transact value, allows people to build their value. So I don't see that going anywhere. And what I do see is that, yes, in terms of the ETFs, we have now opened the door to potentially trillions of dollars coming in to blockchain, because the ETF gives incredible credibility to the space, to begin with. And then from there, certainly it opens it up to institutions and all kinds of other organizations to participate, just to put in like 1% of their billions of dollars, that they have sitting aside, to put it into crypto. And then that essentially, if you just look at the numbers, it's massive in terms of what it can do to our space. Our space is very tiny, actually, compared to pretty much any other space, commodities and the Forex space. It's tiny, right? So when you have just like 1% of the global wealth coming into the space, it's going to make a big impact, and that will have a trickle-down effect, as you said, because it means that more people will be wanting to hold their assets in blockchain, meaning they'll try to figure out how to put their money to work, and at the same time, with all these new blockchains that are launching, what is going to link them together? It's going to be, how do you trade on them? How do you lend on them? How do you connect them together, all these different chains? And for us, we see lending as one key piece that will unify all that liquidity. Otherwise, you'll have so much fragmented liquidity. So money will come from the top, and then we will find a way to unify that across all the different chains through lending. That's our thesis, at least.
It's an exciting future ahead, Kyn, and I'm looking forward to that multi-chain unified liquidity. I feel like that's going to be a big move, especially with all that capital that will move into DeFi. I'm sure Minterest is going to play a role in it. I'm excited to see how it plays out. So we don't have a lot of time left, Kyn, but what is the best way for people to take some either deposit it or just learn about the mechanism, see what the yields are right now, or check out the NFTs that just dropped that you mentioned? How can they get started to get involved?
Sure, absolutely. So simply go to Minterest.com, and right there, what you'll be able to do is you'll have a link to the application, the Minterest application. You click on that, and from there, you'll get to see the marketplace, all the different assets that you can lend and borrow. And you'll also have a link to the NFT gallery, as we call it. So you can then, on the exact same page, you can see all the NFTs and how they work. So all the information is there, including our socials, including the blog. Everything is there, so you can get access to all the documentation. So Minterest.com is the best place to go to, just to kind of start that journey. And you have plenty of educational material there for anyone that wants to do it.
Awesome. Thank you so much. And I love that the NFTs actually bring utility and value into DeFi. Myself, I'm more of a finance guy than an NFT guy. But when you incorporate that kind of value into an NFT, it's no longer just a picture of dog or of a famous person. All of a sudden, you're actually having utility behind that. So I love that. I hope that becomes a trend for more NFTs. And I'm going to check out the marketplace. From what I understand, there's not as many available because people are holding on to them for the yield. But I know that there are some. So I'm going to check it out. I'm going to leave a link to the NFT marketplace as well, just a direct link, and to the Minterest app for people to check it out. I appreciate your insights into DeFi and the growth of Minterest. It's an exciting path, and let's definitely follow up in the near future again, Kyn.
Love it, Ashton. Thank you so much. It's been awesome. It's been fun talking about NFTs too. It's one of my passions. So thank you very much for letting me have a platform for that. That's pretty fun.